Yo, yo, yo! What's going on, guys? And welcome to episode 7 of Owl Eyez on BASE Defi, the weekly show where we talk about DeFi yields and how we can get our capital to work for us. Every week we have a section where we dive deep into DeFi. Crypto Noah is a DeFi yield expert, but then also a master of understanding the mechanics that go into the different layers of DeFi. So learn with me as we go down the rabbit hole. So without any further ado, let's pass it over to my wonderful co-host, Crypto Noah. How are you today?
Man, never better, man. Never better. I can't complain. It is Tech Week here in San Francisco, so I was networking yesterday. I'm gonna hit some events after this one today. Got a special show for you guys today. We already talked about why BASE exists, what rollups are, and how they work. But today we're gonna dive into the differences between optimistic and ZK rollups, why BASE decided to build on the OP stack. We're going to dive into the super chain thesis. We're going to talk about the future and how they plan on integrating ZK rollups into their stack and what it can do for yield farmers, as well as check out some yields. And per usual, guys, I forgot I had this shirt. So since we're talking about optimism, I got on my oh, shit. Dude, I got on my optimism shirt. It says "Sup nerds." Got like some stuff, and on the back it says "Optimism." So yeah, I had to dig deep in the stack. This is the East Denver Classic. I could have got it in long sleeve, but I always prefer to go short sleeve. Man, how you doing, man? What shirt you rocking today? Basejunkie, his kids was sleeping. I told him like, man, you gotta. He spilled some bean juice on his shirt, and I'm like, bro, you gotta go be a peeping Tom and creep in there and grab a shirt, man. How you doing?
I'm always impressed by your ETH Denver swag. Yeah, I think there must be like the best shirts over there. I can't even remember if I've worn this shirt on the stream before, but it's actually one of my favorite tees. It's like super comfortable, long. It's a long tee, so none of that Britney Spears show tummy stuff. Yeah, you are right. My kids were sleeping, and I was like, oh shit, I'm not wearing my crypto swag. Should I just wear a normal tee today? He's like, dude, go in there, you got it. So I was full ninja mode, and I managed to get this from the wardrobe. This
Connect to Web3. I think you have worn that one, but hey, it's better than a plane, so we'll take it.
Yeah. It's from On-Chain Summit, Dimes on Base. But to be honest, it's just like the fit is so nice, and to be honest, this is just like anybody who's watching is looking to do merch, make it nice quality. I know they giveaways, and you can go for the cheaper cottons and you save yourself some dollars. But when I've looked at prices and I look at the shirts I want to wear, the ones that probably just cost like an extra like $3, like wholesale, $3 more for a nicer fabric and nicer fit, man, I'll wear that like 5 times as much. So I'll be a human billboard for you if you give me nice merch.
Man, you know what I noticed before we dive in is that when you go to ETH Denver or any crypto conference for that matter, when you go during the bull markets, the shirts are always better quality, better designs. When you go during bear markets, they're usually like the cheap, hard Gillidan shirts, and they're usually all black. So ETH Denver this past year, it was bullish market conditions, so the shirts were amazing, and I'm hoping that things don't crash before next year. But usually people order them beforehand, so I think next year will be a good time to go.
So remind me, what time of the year is ETH Denver?
It's like end of February, early March-ish. I think it's end of February. You can go on there and apply. It's free, and it's the largest crypto conference annually. I think it's even bigger than Bitcoin Miami. And I like it because, the Bitcoin conference is more of like money focused, which is cool, right? But ETH Denver, all the altcoin projects come out, and you really get a bird's eye view, insider trading kind of vibe as to what people are building. You can talk to the team.
We are having an extended cycle. Then, I think it's one of those things like the vibes could be amazing. It could be like the best time. Honestly, I think ETH Denver must have the best merch. So
do by far. Man, the good thing about going to conferences in the bear markets, though, is that that's when the real building is happening. Like in the bull market, I always tell people, like, think about NASCAR. When you have all these cars on the track, they're showing what they've been building in their garages for months and years. So it's kind of like the same thing going to events. Like when you go during the bull market, what's out there, the merch is better, right? It's more flashy and you see what's been done. But when you go during the bear markets, you really see what people are building. The conversations are better because serious people usually go, right? So it's good to go anytime for different reasons.
Absolutely, well said. But I am curious to know more about today's topic and learn more about optimism, especially seeing as you are wearing your optimism merch.
Sup, nerds? All right, we're about to nerd out, but guys, I pride myself on explaining things very simple. So I always give Basejunkie the free reign to cut me off if anything gets too complex. But I really spent some time and I actually came up with an analogy that I've never used to explain Rollups. So, just to quickly review, go and watch 2 episodes ago when we talked about it. I'm not going to get super deep into the point of Rollups, but long story short, they're built to help Ethereum scale. You have 3 layers to a blockchain. You have a consensus layer, a data layer, and the execution layer. The execution layer is the computational finality, and that's what layer 2s are built to help scale, so they can increase the transactions per second and lower gas fees, because we're all competing to get inside of the next block, no matter what the transaction is. Okay, so these rollups kind of work like emails, where when you compress an email, it shrinks it into a smaller packet of data so you can send it off, and then once the person received it, they can unzip the file and get all of the data. That's exactly what rollups do. They roll up your transactions, they compress them, and then they send them to ETH mainnet or whatever the layer 1 is, so that you can still inherit the security benefits. So now let me explain it another way in case you don't understand that, in case you never zip the email. Because, by the way, retweet this, tag Base, tag Optimism, comment. Let us know if you guys have questions as well. We do take comments on stream. But here's another way I thought of. Imagine Ethereum's like a busy city where every car is a transaction, right? They have to drive through the same small road. Okay. Now, during rush hour bull markets, it gets crowded, slow, and expensive. So people build these layer 2 highways, Optimism, Arbitrum, and they're like special express lanes to help cars move faster and cheaper. So it's 2 main types of these express lanes. And you have optimistic rollups, and then you have ZK rollups, which stands for zero knowledge rollups. Okay. So let's talk about the differences between. So optimistic rollup, the theme is like trust, but check later. Okay. So you can think of them as a trust first highway, basically. Let me keep the highway example, and then we'll kind of dive into the details. So when cars enter or transactions enter, the toll booth worker basically assumes everyone's honest, and they just wave you through quickly to keep traffic moving. But there is a security camera, right? So if someone tries to sneak with fake info, another driver can report them later. And this is called a fraud proof. So basically, if you have a transaction that is fraud, you have, I think it's a 7-day period to where someone can say this is a fraud. And that's hence the name optimistic rollups. They're optimistic that the transaction is legitimate. Okay. So because of this wait and see period, it takes a little while, like I said, usually a week, before your trip is 100% confirmed on Ethereum. So the theme is faster and simpler, but you have to wait longer to be fully sure everything's valid. All right, so now let's talk about ZK rollups. Before I get into the car analogy, the famous example of ZK rollups is like the Where's Waldo, right? They basically allow you to prove something is true without telling you how they got it. And this is good for like large manufacturing companies and banks that want to like exchange information without, revealing what they're doing and why they're doing it, etc. So you can think of them as like the math genius highway. So instead of trusting anyone, right, every car that enters the express lane has to show a super smart math certificate that proves everything is correct, right? So Ethereum checks that proof right away. No waiting, no arguing, just math. And that means ZK rollups are faster to finalize and even more secure, but the math is very complex and expensive to run. So going back to the Where's Waldo example, it's like picture you have a picture frame with a bunch of people on it, right? And your whole point, the whole thing that you're trying to do is find where Waldo is. So how a ZK proof works with that is that it'll show you on another screen a super small circle showing that it found Waldo. They don't tell you how they found it, and they don't tell you where he is in reference to everyone else on the photo. Okay, so it's more advanced and secure, but it's harder and costlier to build. That's the trade-off, right? So optimistic rollups like saying, I believe you, I'll double check later, while ZK rollups are like saying, show me the proof right now. Am I pretty clear so far, Basejunkie? Everything makes sense?
Yeah. I mean, brilliant analogies.
Okay, cool. So now Coinbase is built on the optimism stack, which is optimistic rollups. And you're probably thinking like, well, why did they choose to build on OP versus some ZK chain? So here it's a few reasons why. The first one is that optimistic rollups are simpler and more proven for now. Okay, ZK technology is newer, it's more expensive. So when Coinbase launched based, ZK rollups were still super new, complex, and not fully production ready for general smart contracts, right? And just to explain what a smart contract is, just in case we got some newbies on here, smart contracts boiled down to its essence, they do three things really well. They store rules, they verify rules, and they execute functions based on these rules. And this is how DeFi works. So I think Nick Szabo came up with this concept where you compare it to a vending machine. So the storing of rules is knowing that V6 is a bag of Doritos. The verifying of rules is knowing that when you put the dollar into the machine, it's able to verify that this is a real dollar so that it doesn't give away all the merchandise for free. And the executing the rules based on the function is knowing that, okay, hey, once this dollar is verified to be legitimate and you click V6, the bag of Dorito falls so that you can enjoy it. And it's basically an if this, then that program. So when you look at smart contracts, you can program it to have rules. And when certain things are met, the desired action happens. So if you have a deed to a house and you want to sell it, instead of having to go to a middleman, and this is why they say smart contracts was going to, destroy the middleman business. Instead of having to go through all these different people and verifying it, you can say, hey, once the money is here and this document is updated, automatically send out the deed. You can put a timer on it. If it's not, everything goes back to original party. Okay, going back to this. They were still very new, right? And these OP rollups, like those built on the OP stack, were already running smoothly with real apps and billions in liquidity. So Optimism and Arbitrum already had lots of liquidity, if you guys remember a couple years ago. So I think that Coinbase just wanted reliability and compatibility first, not just this cutting edge risk, right? So they chose the safer, proven, battle-tested route, speed and stability, and they wanted to get to market fast because it's about timing sometimes. Number two is that the OP stack, and we're going to talk about the super chain thesis as well. The OP stack is open source, modular, and has a shared vision. Modularity basically just means division of labor, where instead of having, it's the opposite of monolithic. Monolithic is the blockchain trilemma, where the scalability, the consensus, the data, and the execution is all happening on the mainnet instead of modularizing and creating specific things to handle specific tasks so that one thing isn't bogged down. So the Optimism built the OP stack, and an open source framework. Open source means anyone can look at it and build off of it. That lets anyone launch their own rollup, just like Base did on top of the OP stack. But the key is they allow this while sharing upgrades and revenue through the super chain concept. Okay, so the super chain vision is shared liquidity and a cross-chain user interface. So you have Krakens built on the super chain, obviously Base, Uniswap's Unichain, their chain that's supposed to solve liquidity fragmentation. So it's a collective of these different chains that will soon share security, eventually ZK proofs for all chains as well. We'll dive into that. Interoperability, so instant bridging between OP chains, and revenue alignment. So you'll have shared governance through the Optimism collective. So the important thing to know is that when all this comes together on Base, you could seamlessly interact with dApps on Zora or Mode without manual bridging, just like switching tabs on the same browser, to give an analogy, right? So you can think of it as an app store for blockchains, and Base is going to be one of the biggest apps inside of it. So I think Coinbase saw this and they were like, okay, why reinvent the wheel when we can just plug into an ecosystem that's already growing fast? They get shared technology, shared liquidity, shared governance through Optimism's collective. And then every chain with the OP stack, including Base, benefits from the same upgrades and interoperability. So it's like joining a growing Lego stack instead of building your own toy from scratch. Okay. The third one is that optimistic rollups is directly aligned with Ethereum's roadmap, right? So you have the Ethereum scaling roadmap, where optimism and the OP stack are designed to be deeply aligned with this long-term roadmap, especially when you look at things like EIP 4844, which is basically their proto-dank sharding. Okay, so this is actually one of Ethereum's most important upgrades, right? And it introduces a new type of data called blobs. Okay, so to break this down simply, right now, when layer twos like Optimism or Arbitrum post transaction data to Ethereum, because remember, they roll up all this data and they post it so that they can batch all these transactions at once instead of doing them individually and clogging up block space. They do it in a very expensive way, right? And they do it by storing the data permanently on Ethereum's main chain. And this is one of the biggest reasons why gas fees on L2s aren't cheaper yet, right? They're cheap, but not as cheap as they can be. So this improvement proposal actually changes that. So instead of storing all this roll-up data permanently and hogging up space, right, it introduces temporary storage called blobs. So they're cheaper and they're only needed for a short period. Think about a storage unit. If you store everything in the storage unit forever, it's like, okay, but imagine you just kind of moving stuff out and moving stuff in. You always have room. Okay, so in simple terms, this proto-dank sharding lets Rollup use cheaper temporary data space on Ethereum, cutting their cost by 80 to 90%. It's a lot. Okay, and this is why you hear that they'll make L2 gas fees drop drastically. It's like giving every Rollup their own discount lane on Ethereum. Okay, and the word proto and prototype, it's called that because it's the first stage of Ethereum's future full sharding plan, where Ethereum's data will eventually be split across multiple shards for scalability. So sharding basically helps scale datability on the layer one, and rollups help scale computational finality off chain on the layer two. They're different, but they work together. Okay. So right now, this proto-dank sharding only implements the data availability part, the blobs, not full sharding yet, but it's the first necessary step toward that. So in essence, temporary data blobs for rollups equals cheaper fees for now. And then the full dank sharding means fully distributed data systems and massive scalability later. Okay, is all that making sense so far?
Yeah, I'd say so.
Okay, cool. All right, so now, how does this align with Optimism and the OP stack and Ethereum's roadmap? And, why should we care? So, again, the OP stack is built to be modular, give everyone control to build their own rollup, right? So, when this improvement proposal launched, when it went live, a lot of people don't know this, but Base instantly became faster and cheaper without Coinbase needing to change a thing, right? And that's the benefit of it. So as ETH moves fully towards this dank sharding, OP stack chains like Base will inherit faster and cheaper settlement. They'll stay maximally decentralized, right? And they'll remain compatible with the entire Ethereum ecosystem. Okay, so, and this is exactly what they have on their roadmap. And I think Coinbase, they've said this many times, Bryant and Armstrong as well, they believe in the future of Ethereum as the settlement layer for all of crypto. You're already seeing that with stable coins. So by using the OP stack, they get to stay fully Ethereum native, helping it scale, which means they support it without competing with it. Okay, so now going to number 4, we're almost done here. ZK rollups are amazing, but they're heavy right now and expensive. They need specialized cryptographic engineers, and they're few and far in between, just like Solidity devs, right? The proof generation costs are high, though they are falling fast, right? And then some ZK systems still have centralization or upgrade risk, right? So I think that Coinbase decided it was smarter to build on the OP stack and then adopt ZK proofs later as the cost, speed, and reliability are proven. Okay, and then again, the Optimism's roadmap actually includes ZK proof integration in the future. So what does that mean? That means that in the future, Base is going to be able to settle transactions instantly on Ethereum using ZK validity proofs. And what this is going to do is it's going to remove that 7-day delay. You're probably like, I don't think it's 7 days. I can bridge and have everything bridge instantly. Well, that's because you're using a third-party bridge, when you use a native bridge, you do have to wait 7 days, and it is more risky to use other bridges, albeit, they are safe for now until something happens. You guys remember what happened with Wormhole, but it's going to remove that 7-day delay, and it's going to reduce risk while maintaining full EVM compatibility. And it's also going to save gas and improve capital efficiency for users in DeFi protocols. And then this is a huge one. Coinbase's long-term advantage is going to be trust and access. So they have hundreds of millions of KYC users. So once ZK-proof systems mature, Base could become the first large-scale ZK secured L2 where every user has easy on and off ramps, verified identity, and direct fiat access, which is something that no other chain can match right now. Okay, so that's pretty much to just Optimism does have a token. I do hold a little bit of it, and I think that this is not financial advice, but when you look in the world of investing, platforms, which the OP stack is, platforms have always been historically the best investments. Like, just to give you some examples, Amazon is the best e-commerce platform. Facebook, the #1 marketing platform. Google, search engine platform, right? The internet is a platform where all this stuff gets built on top of. Other than the internet, had you bought any of those things, the App Store, Apple's App Store is also a platform where you can build applications. Google's Play Store. Had you bought any of these when they IPO'd or even shortly thereafter and held till now, you would do really well. Ethereum is also a platform for decentralized applications. So I like Optimism as an investment long term, especially because you have a public company building on top of it with all these stable coins and all these things. So yeah, I'm really bullish OP. That was pretty nerdy, but hopefully everyone understood that this is a DeFi show. And Optimism is also a place where you can get some good DeFi yields. But we wanted to make sure that you guys are understanding how this stuff works on the back end, because it does filter through your investment decisions when you're comparing these different roll-up solutions.
I mean, to be honest, it's been very, very informative, like hearing about the different options and the rationale as to why Coinbase is building on the optimism roll up. And then of course, it's all well and good to having like degen plays, but as you mentioned, diversifying or like building or like having a long-term horizon and backing or like investing in an infrastructure play, that especially if you have Coinbase building on top of it, I mean, that's not going anywhere. The demand is only going to increase. I mean, this is economics 101, just supply and demand. The bridge, the 7-day bridge that you mentioned on the official way, on the official bridge, you said that's 7 days, and third-party bridges you can do it faster. Is that because they're borrowing against their own pool and claiming some fees there?
Okay, so let me explain it the simplest way I can. So the native bridge, you're waiting 7 days because, like, if you do some kind of BS transaction and you have all these validators or whatever they're called that is looking at these transactions, and if it's just like the slashing concept, if you're on Ethereum and you try to approve some like illegitimate transaction, they will slash your rewards, right? And it's kind of the same thing. So everyone is incentivized to verify legitimate transactions, not just because of the slashing, but you have all this equipment and hardware and your own assets at stake that you want this thing to succeed because you have skin in the game. Now, to answer your question, these other bridges, a lot of times they'll have like liquidity providers where you can just like you can provide liquidity on a decentralized exchange, you can provide liquidity on a bridge, and they will use your assets so that, okay, if one person wants to go from ETH mainnet over to Solana, you'll have your assets on both, so that just like when you use one to swap to the other one on a DEX, they'll use it to swap it from one chain to the next, right? And you have a lot of minting and burning and stuff that happens on the back end, but that bridge still has to go through the native bridge as well. So they're still having to do the same thing on the back end.
Right. So I didn't completely get it. Like the third party bridging company, are they fronting you the amount that you're bridging?
Some of them are.
Some of them do, just to win on terms of speed, and then they claim a fee.
Yeah. And it's like they do their own verifications on top. So they're not just blindly saying, oh, he's saying he wants to bridge 10 ETH from base to wherever, which we trust them. Like they're still able to see what you have in your wallet. So it's not like they're just having blind faith.
Right.
Yeah.
And just before we go into the yields, I actually missed it. What was these? What happened with Wormhole?
Wormhole, there was a major hack a few years ago.
Oh, years ago. Okay, because I remember there was the.
This was when FTX was still around.
Okay, man, this is like, way back when.
I wasn't using this bridge. I never used it. Wormhole bridge.
See, I used it more recently than that because this was one of the times where I got an airdrop, which I didn't realize I qualified for, on Phantom Wallet. I think it was like bridging some money between Base and Solana, and I guess Wormhole was just the back end for the site I was using. I think I was using like Mayan Swap or something. And then just one day, it's like, hey, you earned $6,000 of worm tokens. I'm like, what the heck? Like, what is Wormhole, and who do I say thank you to?
Yeah. So this happened in February of 2022, and the hack was because of a vulnerability in a smart contract that allowed an attacker to forge a transaction approval and mint 120,000 wrapped ETH tokens on the Solana blockchain. So the hacker bypassed the required security verification, draining 326 million, and what became one of the largest DeFi exploits to date at that time. And I forget who made them whole. I don't remember if it was Binance or FTX or one of the large three arrows, one of them. Jump Crypto, which is a major back of the Wormhole excellent. They replenished the 120,000 ETH to ensure everything was fine. So it was Jump Crypto that came in to save the day back then.
Have you ever used Jump Crypto before?
I think they're like a fund. They're not something you can use. They're a trading firm. Yeah, they're a trading firm.
Well, I mean, shout out to Jump Crypto. That's a strong move.
That's big stuff. Yeah.
120,000 ETH. Like, did they ever catch anybody for that?
That I don't know. Let me see. Were the hackers? This was back when I was like hated Solana, so I didn't really care, and I never used Solana back then. But yeah, they have not been caught, but the stolen funds were replaced. Yeah, no, they're on the beach somewhere, bro. That's crazy, man. That's insane.
I mean, like they literally could just stake that 120k ETH and just be printing $1 million a day in fees.
Well, the tough part is once a hack like that happens, because I was a victim to the Radiant hack, they do kind of like put a tag on the hacked funds so that like if you stake it on a platform or put it somewhere, it'll get taken from them. So I'm not sure if they was able to liquidate, or I'm not sure what they were doing. By now they probably went through Tornado Cash and like mixed it and like
all that stuff,
something like that. So they probably washed it out by now, honestly. But yeah, that's becoming harder and harder to do nowadays.
Yeah, but that's great for crypto security, but also as the security measures are getting smarter, so are the hackers. And I think I still see this year, unfortunately, I think social engineering is a big one. So even though the tech can get to almost impenetrable, the weak point often is us. So just stay safe, guys. And if it looks too good to be true, it often is.
Yeah, unless it's triple digit DeFi yields, because a lot of times.
Yeah. In fact, I changed up my picks.
What'd you do, man? Let's talk about it. let's see the deck screener. I want to see what the range is looking like and see if everything is still like consistent and consolidating. And then let's look at the yields and kind of see what you changed up, and we can talk about it.
Okay, so let me share my. Let me put up the right chart before I share this.
Yeah, guys, stick around to the end because I'm gonna pop open my our in-house tool, and I'm gonna show you guys the best yields on base on Optimism as a treat today, since we're talking about OP. And guys, join our community. We have a free community where we're gonna start putting out our weekly DeFi profits every Friday. We get a market update in there and a lot of cool community interaction things inside of there. And if you guys want to book a one-on-one call to see if it's a good fit for you, just DM me on Twitter and say, send me call booking link, and I'm happy to hop on. Embryo Dolphin, we saw you hop on in there. Let's chat. We're happy to have you in. All right, let's see what you got here, man.
Yeah, and I finally joined the No Owls community. Really, some smart people in there.
Yeah, we finally got him in there.
Yes. All right. So I have been learning. So yes, if you are drawing ranges, make sure to click on your own watch list.
Oh, you're on market cap. You got to hit price. That's why it's not showing. There you go.
There we are.
Oh, dude. Nice. Now you had multiple ranges in there. Are you just in one now, or?
So yes, I had three. So for the last week, I was tranching. That's a new term I learned. Having different spreads on different positions. So one of my positions was super tight. Like literally, I saw maybe like, so this was October the 1st all the way to the 5th. So that's 4 days of just insane consolidation there. Like that is, it doesn't get tighter than that. I think it was up and down maybe 0.5% daily. So I had one really tight range, and then we just wicked out of that like a couple of days ago. So I exited that position just ETH. I think it was like about a $200 position. It wasn't like a big position. It was just like, okay, let's see how much I can capture from this. But I think the volumes come down. I noticed that. So
the volume came down, and you got an additional 100K in liquidity in there, because remember it was 1 million since you brought it up.
That's a good point. I'm thinking that must just be token prices going up. I'm not sure if people are actually adding to liquidity, but
no, because the token price is. You know what? That's a good observation, man, because the token is actually down since you hopped in, but it's still $1 million in liquidity in there. So actually, I'm not sure.
I mean, ETH is up. I mean, this past week we've been seeing like 16.9, like 17 has kind of been like the market cap, and now it's like back to 18. So let me put up what my pool is. So I closed one of my positions. I closed two of my positions. I closed my super tight one, and I closed my widest one because it's just moving sideways. Let me show you here. Clicking on this to look at the volume and fees. One of the reasons why I like Golden, I believe they'll be here for the long term, and the consolidating chart means that you can have a tight range. Okay, so yeah, this is daily. So when I started to get into this, because we're week 7 now, so we've been doing this since like
I think like 2 or 3 or something like that.
Yeah, so it's like beginning of September. Like, so like you can see like the fees. So I mean, I got in maybe, I think I was in it for like 3 weeks or so. So having like 3K in fees, 2 and a bit, and then $800, 1K, 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 1K. So okay, so fees, the amount on the trading volume has kind of cut in half.
It's actually important to note, since you're speaking of this, Space Junkie, that the fees might be small now, but you have to keep in mind you only provide liquidity for something that you wouldn't mind holding, and you know, Base Junkie is really bullish on Golden for multiple reasons. So while the fees may be small now. If you're constantly adding to your golden bag, if golden appreciates in price, and from what we've been talking about, it sounds like it's a high chance that they will. Dude, you made almost 100% APR in like a week. That could translate to, if they do a 3x, you made 300% in 1 week, right? That's why I call it impermanent loss and impermanent gain.
Yeah. So I mean, that's one of the reasons why I pulled out one of my positions, because I'm thinking like, you know what, we're seeing a lot of consolidation here, but once they make the next move, we can very much shoot out of this range. I've kept my mid range, which is this one here. So we'll capture some of that momentum on the upside, but then I also want to start having growing a spot position of this, because I think we're going to break out of here at some point. I'm not sure when, but I want to position myself for when it happens.
Yeah,
But,
another. Go ahead. What are you gonna say?
No, I was going to switch to my next call, but go on.
So before we switch on to the next one, ooh, that one's pan out. Very nice. It's important to note, like, while this thing is cheap right now, you can also look at yield farming as like DCA, dollar cost averaging, right? And if you're like, let's say, he's in this ETH golden pool, and, let's say you're getting 1% a day, right? You're getting 1% regardless of what those two assets are. Like, you're getting that 1% at the current value of them. So when ETH was at 3,800, you got 1%. A 1% fee while ETH is 3,800 is going to be, once ETH goes back up to 46, 5, 6K, is going to translate into more. Same with golden. So you're constantly, you can kind of think of it as constantly DCAing at these small prices, right? And that's why it's good to provide liquidity when things go down, and think long term, because when they come back up, it works out in your favor.
Exactly. Well said. Yeah, and I think, as we also said previously as well, with like not having all your eggs in the liquidity pool provided, because obviously this is a nice feeling, to just be receiving just cash daily. It's like great. I've got some money I can either compound, or I can buy an NFT that I like, or enter some other plays, just diversify a little bit. But if the price does dramatically shoot up or down, you will be holding the less performing well assets.
Yep, the underperformer. That's correct.
Okay, so this is a position I actually opened just a couple of hours ago. So I closed the position that was 1,200, and I've opened a position that was like under $700 here, because I wanted to keep some golden just in spot, just taking some of that off the table in case we do see some uptick here. But this is a new project that I've come across recently, OpenX AI. We can do a deep dive into this another time, but from what we've learned about this project, I'm bullish. So TLDR on this, they are a decentralized AI storage solution. So like they have nodes. They have 25,000 nodes across the world, and you can rent their GPU space, and you can also you can rent the GPU space to use their AI agents, or create an AI agent for yourself, something completely owned by you. On the 16th of October, they're going to have a sale of their physical nodes, and they're looking to raise maybe like $50 million. So I think they're gearing up to be a big player on Base. Current FTV is 62 mil, market cap 7.5. They're in this consolidation stage right now. I think we're going to see a lot of volume heading up towards the 16th, which is a big day. They announced this on their Twitter recently. Let me find their page real quick.
It's a pretty small market cap for a huge narrative, and I like that they have locked liquidity. You see the locked around liquidity? That means that liquidity is there to stay. So that means that they're locking up ETH that they could sell or wait till it goes up, or their token shows that they're putting skin in the game and they believe.
Yeah, yeah. And like, look, so this is like 7 hours ago. Major update. Like they are making it possible for people to use, like, create mini apps. So like on the 16th, this is the big announcement. They're going to make it possible for they're launching the mini app factory where you can talk to an AI agent, tell them your big idea, and then within minutes you can be launching your very own uh, mini app on Base app.
Wow.
So yeah, I mean this is going to be, in my opinion, not financial advice, a big player already getting big traction. Early days. I'm gonna have to ape some of this. Um, it just makes sense to me.
What does it mean that they're on Zora? How are they on Zora? Is Zora like their own chain? Like,
No, I mean they've probably just launched a creator coin on there. I just
oh, okay. No,
so
I noticed that if you go to the Stargate Bridge, which is like one of the most popular bridges, it's a layerzero bridge. I use it all the time.
hmm
Zora is one of the options where you can bridge to.
that's I mean that seems interesting to me.
Yeah.
Okay, so look here we have 100K market cap. Um, yeah, they've created economics. Oh, this is the creator. So they've been buying their own. Is that what that means?
Man,
Anyway,
I can see a world where like base projects such as this one, Zora, launching incentives to where like, oh, if you own some of these posts, you get XYZ, maybe an airdrop. Like I can see a lot of Zora's going to unlock a lot of incentives, I think.
yeah, I mean, I think Zora is kind of like the golden child. Yeah, I think they are going to feature heavily in lots of basis plans. Let me just click on send. I just think that chart just cannot behave itself. 42 cents. Shame on you guys.
Hey,
But
the longer it's down, the more you can accumulate it. We're gonna, guys, make sure you tap in next week. We're gonna do a live fundamental analysis on Syndicate. We were gonna do it today, but it would have been a little hefty. It'll have been long.
yeah, so just to give you my short thesis on this, so I've put a lower limit kind of like around here, there, and then I want to give it some room to grow. So
You're about to hop in this one. Oh, this is your range. You're saying.
yeah, so minimum price 6,000. So if you can just quickly show me how, yeah, so I've got minimum price 6,000, maximum price 11,000. The current price is 7,300.
And this is
So this is the OpenX.
okay. Okay.
Yes.
All right, and then go back. Let's see. Oh, you're on the USD chart. You got to hit wrapped ETH. There you go. And now what you also have to do, go to yep. This guy's learning, man. Man, teach me a thing or two. Jeez.
All right. So 6,000 was my lower range. So 6,000 here. And then my upper range was 11,300.
And what made you choose that range, man?
I wanted to give it some room to breathe. I don't want to get too. I mean, like there isn't really too much to go off like back testing. I mean, maybe you could even tell me what's a better range to look at. Maybe 13, maybe even as high as 90. But I didn't want to do it too wide. Like I very much like the tight channels, and if it's consolidating within that, lovely. More room to the upside because I think OpenX is going to outperform ETH over the next 2 weeks, and I think especially up on the 16th, we're going to see a lot of volume to the upside. So I want to capture some of that volume. So that's why I've left it with some room to grow.
So here's what I think. I think that's a good idea. Another thing is that this will be a good one to do a tranching strategy because you're expecting it to, maybe consolidate until, the 16th or whenever the date was. But you're also expecting it to rally. So you want to maximize for both of those. And A big thing that a lot of people don't think about, when you are providing liquidity in a wide range, yeah, the yield's not going to be as much, but if you're expecting something to move, especially short term, the capital gains that you're going to make, because remember, if you, as you're in this OpenX ETH pool and OpenX is going up and outperforming ETH, and you have a wide range, you're taking profits in ETH. So whereas like right now you're getting 500% APR, maximizing the consolidation, which is great, you'll actually make more if it does what you think it can do in the short term. If you give it room to run on the upside, the fees may not be more, but the profits you'll take as it's running up in ETH will translate to more. You get to make capital gains and fees, but in tight ranges, you don't get many capital gains unless they both go up at the same time. But we're not expecting that because this market cap is small, and they have their announcement. They're pretty new, and it's a pretty good project. So that's what I would say. This might be a good one to do a trancher so that you can maximize the capital gains and the yields. So you catch the large candle, you get some good yields, and you get the capital gains.
So in terms of tranching, would you be looking at like putting another level like higher than this previous wick, or like the body?
So this one is since you have it inverted, when this chart is going up, that means ETH is outperforming. You got it, and this is one of those intricate things that you gotta really keep in mind, because if not, it can fuck you right on good. Since ETH is first, when the chart is going up, that means ETH is actually outperforming. When the chart's going down, that means OPX is outperforming. So you actually, since you have it inverted, you actually want to give it room to run on the downside. Does that make sense?
Oh snap!
That makes sense, though, right?
That does make sense. So hang on. So I've made a mistake here because I'm giving this room
for ETH to outperform.
Oh no.
Yeah. See, it's this liquidity providing is intricate, man. Just like when you farming, you got to make sure you're watering it with the right amount, and you got the right fertilizer for the right crops. It's the same thing here.
Yeah. Okay. I'm going to remove liquidity and and rebalance. So hang on. So I need to put more ETH in than OpenX because I think OpenX is going to outperform.
It's not even that you need to put in more ETH. The amount that you put in ETH is relative to what the price is in regards to your range when you get in, right? If you're expecting OpenX to outperform ETH and you have it inverted like that and ETH is first on the chart, you want to give it room to run on the downside because that means OpenX is outperforming ETH. If OpenX was first on the chart, then, or in the ticker, if it was OpenX ETH instead of ETH OpenX, then you would give it room to run on the upside. But since you have it inverted, you got to give it room on the downside.
Right. This is good to know. This is cool. You saved me. Like I was talking like, yeah, so giving it room to grow. I'm giving it room to crash. Jeez, all right. Well, yeah. Honestly, I do very much appreciate these. I feel like it's an easy mistake to make.
It is, man. It's so much room and margin for error when you're doing this stuff. It really is. You want it to be like that. Remember, you can always invert it back on your chart, and you can invert it on Uniswap, so it can show how you want it. You don't have to do default.
How can I invert it here?
Well, you can't invert it while you're already in the position. I'm saying before you enter the position, you can say what you want it priced in, and that'll invert it.
Right. Okay. Well, look, I think I'm going to fix this after the show. Since collecting fees here, I've already got another quarter. So.
And you got you a stick of gum, man. I'll take it. You throw that in the bubblegum machine, man.
That's what's up. All right. Well, look, I'm gonna stop sharing that screen.
Let's look at some. Or go ahead. I was gonna say before we wrap up, let's look at some good OP yields, some good base yields. And
yes, of course. You would literally just saying that before.
Yeah, and then we'll put a bow on this. This is our handy dandy yield hunter tool. I think I'm gonna start to rename it to the yield cropper. All right, so it shows all the pools in DeFi in close to real time. You can search by chain or protocol. Let's look at optimism. Let me see, where is it? Boom. Let's look at some yields. So the top yield and pool on optimism. The yields on optimism isn't all that. It didn't really nothing to write home about. And what's interesting is that if we go on DeFi Llama and we look at chains, it's crazy that like Base is built on top of optimism, but they don't factor that into the TVL because, like I said, it's modular. So they allow chains to be their own thing. So it has to be tracked that way. So OP mainnet only has 425 million in TVL, right? Which is not a heck of a whole lot. So if we go on here, the yields aren't crazy. Like this is the best yielding pool on Velodrome. And if you go on Base, 186% in terms of all pools is going to be probably in the hundreds down the line. So you can kind of see some of the pairs, and we're in the 40s and 30s. Like that's like absolute shit when it comes to DeFi.
I mean, literally, like, see, like 1%. It's like, just, like, put it in the bank.
Yeah, literally. Yeah, put it in the bank. Let me actually move this out of the way. And now let's look at some base yields. Yeah, see the difference? Largest on base right now is Terra Rapti, but also keep in mind, sometimes the super new tokens don't show on here. Like we tried to look at OpenX on here, but it wasn't showing. So if you guys are watching and you have, go ahead.
Question here. So Toshi, I mean, Toshi are going to be around, paying nearly 1,000% APR. That's crazy. I mean, I feel comfortable holding Toshi, comfortable holding with.
Yeah. 1% as well.
What are your thoughts on this particular one? Like for someone to get into, like with a correlation of 90% as well.
Yeah, I mean, if you're bullish on and this Toshi ETH pool has been actually printing for a long time. I've been seeing it near the top for a while. If you're bullish on Toshi, which I think it's the top base meme coin, yeah.
I mean, Brett maybe is number one, but Toshi's top two.
I was in the ETH SPX pool for over a year. So if you're bullish on the meme coin and you're keeping up with what's happening in the community and you're setting intelligent ranges, I don't think Toshi's going to go to zero. I think it's a good pool to be in. I'm not in it personally, just because I'm in other pools that, I want to be in right now, that I want exposure to. I personally don't want exposure to Toshi, but for someone who does, I would say this is a good pool. I would.
Do you not want exposure to Toshi because you're not into meme coins, or?
No, just because there are other projects that I'd rather hold in this cycle, man. I'm actually glad you asked this. I'm trying to be less diversified. Warren Buffett, he has this famous quote where he says diversification is insurance for idiots. But this is coming from a guy who spends his whole day reading through different stocks. So that only works if you're able to, it's almost like modularity in a way. Like if you have the time to like specialize and read up on everything and make a decision based off of having a wide array of knowledge in that area, and you're investing into what you understand, it is smarter to be able to pick things because you're using your gift and your time. But if you're a person that doesn't have that kind of time, full-time job, kids, whatever the case is, then it's better to be more diversified, or even like invest into an index where you have broad exposure to multiple assets so that your portfolio performance isn't so dependent on one or a few assets. So for me, who is blessed to be able to have a lot of time to, look at this stuff full time, there are other projects that I think will outperform Toshi. And while some of them, the APRs may not be paying this right now, like I said, this is selling shovels during the gold rush, and I am expecting the gold miners to come on in town here pretty soon, and I'm expecting to outperform. I'm just patiently waiting.
That's fair. That's fair enough. And in your opinion, do you think there will be another meme coin season on like period?
Absolutely. Absolutely. So I actually, let me stop sharing here. I wrote an article on our Substack, subscribe to Know What Owls on Substack. And we wrote an article about the value age and how we're moving into the value age and like these creator coins. And we have the Clarity Act that's lining up for you to be able to raise 75 million and launch your own token as long as you decentralize in 4 years. And I talked about how meme coins, I used to think they were going to go away and they were going to be a fad, but you got to keep in mind, NFTs came one cycle, gone. Haven't really heard about them since. Yeah, Pingu's been around, but they're more of an actual business. Like they're building a business, they're building the abstract chain, which I made a video on. But meme coins have had multiple cycles. And there was a time where all the meme coins were worth more than public companies. And they were the most popular on-ramp for people to get on board into crypto. And what I like to compare them to is sports betting, right? And kind of almost like trading, but trading is just a little more serious. Like if you look at sports betting and trading, the difference, let's look at some differences and similarities. The difference is when people trade, they try to be serious and they're not just like, oh, gambling, blah, 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 like some people do. But a lot of traders, like they try to be serious. But when you're sports betting, it's more of a fun thing. It's more of a social thing. Traders, like people who are professional traders, they're usually like not people who are socially awkward, but like they like to work alone, socially isolated. It's not a social thing by any means, right? There are traders clubs, but it's not a social thing by any means. But when you're doing like fantasy football and you're sports betting, it's something that you like to talk about with your friends. And I think investing into meme coins is like that. It's a social degenerate thing to where, again, just like trading, just like sports betting, most people lose. But if you lose money in Shiba Inu, Mamma Mia, Cum Rocket, that's funny to talk about with your friends. And I think it will always be like that. And I think meme coins is a huge part of crypto culture. And with the creator token meta, with Pump Fund being able to have required, not just being required to launch your own token before you live stream. And then with Zora and having your creator coins and even each post being its own token. Imagine if Zora was around for 10 years and all these memes came up on the internet and you can actually own a piece of the most famous memes in the world. Dude, that would have been crazy. So I don't think it's going away by any shadow of a doubt. I think it's going to get stronger. It might change and it maybe get harder to make money. It might become more structured, but I don't think it's going away because memes aren't going away and creator tokens aren't going away. So
yeah, I think that's a well-founded analysis. I mean, memes are super easy for normies to get. It does what it says on the tin. Lots of people don't want to read white papers, and I think that's that simple factor right there. Like, I think that's why people enjoy NFTs and they enjoy meme coins, because it's like you can get the joke. You get the joke with meme coins, and for NFTs, I personally am bullish long term on NFTs.
yeah,
There isn't the same sort of hype around it that there was last cycle. I do believe NFTs to be like a great source of community. Less like more illiquid than meme coins, easy to see. If you like the art, you check it out, and then you meet people who vibe over the same thing. Wonderful, long term community growth, brilliant.
yeah, and also like a lot of people don't realize this. I think like right now, Web3's killer app is stablecoins, right? They make a lot of money. It's simple. But I think what's going to be crypto's killer app in the future is NFTs, but not JPEG NFTs, tokenization of assets. Like NFTs are required to tokenize real estate, to tokenize stocks. We already saw Arbitrum launch their, Robinhood launched their layer 2 on Arbitrum to allow investors in the EU to buy American stocks. What do you think they're using for that technology? NFTs. That's the only way to tokenize something. So it's going to could extend the United States reign, right? Because now you're opening up the floodgates globally for people to be able to speculate on the United States economy through NFTs. People want to own real estate in the United States or just foreign places, period. If I had to give NFTs a headline, NFTs are going to allow people to be able to diversify and buy assets globally, whether it be real estate, stocks, bonds, commodities, gold, whatever. Using NFTs, you're going to be able to buy things globally that you would not have been able to before because the technology doesn't allow.
Yeah, it's going to revolutionize lots of different industries. And yes, as you said correctly, JPEGs were just JPEGs are just the
Trojan
horse.
one. They're the Trojan. You're the Trojan horse.
It's like the Web 1.0. it shows what the tech is in like a very visual way. It lets people see, like, okay, wow, digital ownership, but the applications do far exceed what we are using it for predominantly. And now, as the tech is, getting more legislated on like a larger scale, yeah, I'm very much anticipate that we will see NFTs in a more advanced sense than we used to.
Yeah, and honestly, man, last thing before we wrap up, I don't know if it was last episode or the one before that, we talked about Web3 and traditional internet adoption parallels. NFTs fits right into that. If you look at the internet, the Trojan horse was marketing. Remember, Web 1 was read, Web 2 was read, right? A lot of people just thought the internet was going to be just a place where you can do marketing, right? Post about your stuff, right? But the internet became the fabric of society, because now you don't buy from any business that doesn't even have a website, right? So pretty soon, you probably won't buy an NFT or any luxury item that doesn't have an NFT attached to it. Like, let's say, people, a big thing is, buying celebrities' former cars and watches and stuff like that. And like, let's say I'm like, oh, this was Bill Gates' pen that he used to write the business plan for Microsoft. And I have a pen, but it looks like the picture inside of the picture of a pen that he was using. If you have an NFT attached to it, it's able to be verified. And one of the values in crypto is verification over trust, right? Same thing. Like when you get in a car, you put on your seatbelt, not because you don't trust the driver, it's just because you're verifying your safety. So it's the same thing. NFTs is going to not just allow assets to be traded globally, but they're going to verify that they're legit on chain, their history, and whatever other metadata that we want to attach to it.
Boom. Yeah. Well, like alpha upon alpha, broadening past DeFi, touching into NFTs. But yeah, it's been a fun one. I'm gonna fix this pool, this OpenX pool. Good eye for catching that. I appreciate that.
When we get off, if you want.
Yeah, perfect, wonderful. Any final thoughts for you before we close this out?
No, join our free community. Tag Optimism, tag Base. Let them know we're doing the Lord's work for them, trying to get the word out. And tune in next week as we dive into either OpenX or Syndicate. It's gonna be good.
Cool. I'm in both coins, so I'm definitely looking forward to hearing more of your insights into both projects. But yeah, okay, guys. Well, I want to say a big thank you to everybody who tuned in today, and everybody who retweeted and showed us some love. In fact, Noah, I actually, for this show, I get a lot of people actually reach out to me off air and in DM saying like they actually are learning a lot from these episodes. I want to say big thank you to you for always coming prepared, always coming with the hot takes and the alpha, letting us learn in real time. So
hey, I do it for you guys. My whole mission is to spread the word, and my name is Crypto Noah because Noah built a boat to help people, save people from a flood. I like to think here at Owl Eyez, we're building an ark to help people sail into this new world of finance and technology. So I do it for you guys, and thank you for riding the boat with us.
Boom. Okay, guys, we'll see you again next week, next Wednesday, 8 p.m. UTC. Until then, stay safe, stay healthy, but most importantly, stay based.
Stay based.